I am so excited to have you on the screen. It's better than nothing, Commissioner Pham. But actually, she and I were together in Singapore only a few months ago during the Singapore FinTech Festival and had a great session with Superintendent Adrian Harris from New York DFS. And I can't believe it. It's only been about 2.5 months, but so much has changed. So I'm sorry you cannot be with us, but for the benefit of the audience, because it is an international one, would you mind just stating what your role is at the CFTC?
Sure, of course, and thanks so much for having me. I'm sorry that my last-minute travel changes meant that I couldn't be there with you in person, but it is so great to be there, and I hope everyone's enjoying Switzerland. Before I begin, let me just provide my standard disclaimer, which is that the views I share today are just those of my own as a commissioner and do not necessarily represent that of the CFTC or of any other commissioner. So I'm very happy to tell you a bit more about the Commodity Futures Trading Commission and what my role is. The Commodity Futures Trading Commission is a market regulator which has oversight over commodity derivatives and importantly has anti-fraud and anti-manipulation enforcement authority over spot commodities, which is something that comes up quite often in the discussion and the debate around digital assets. The commission is structured the same way as the Securities and Exchange Commission. So there are 5 commissioners, each of which are nominated by the president and confirmed by the U.S. Senate. And one of those commissioners is designated as the chairman and has the administrative responsibilities for the agency. So I am one of those commissioners. I was sworn in last year on April 14th, and it's a pleasure to serve.
Congratulations. So let's just start off with the fact that I met you in November, and then FTX happened and all the fallout, and now we're 2.5 months on. From your perspective, what is the biggest thing or a few things that have really changed in terms of you as a regulator looking at this space now? Has anything changed?
This question comes up so often, of course, when you look at the widespread knock-on effects and some of the fallout that you've seen and that you're continuing to see. And I think some people aren't sure if we've even seen the bottom yet. But I think what is remarkable to me and notable to me is how much has not changed. So, for example, back in May, when there was the first wave of the crypto crash, I said regulators couldn't fail to act any longer to provide regulatory clarity to ensure that there are guardrails in place and protections for customers. And I think that this just shows how important it was to take action and that delays in taking action do have real consequences. SEC Commissioner Hester Peirce and I did an op-ed where we called for joint public roundtables to look into the causes of the crypto crash and to examine what types of further guidance or interpretation or rules might be necessary and how do we incorporate and think about this new technology into our regulatory frameworks. And those roundtables were never held. I have to wonder that if we did have that kind of public inquiry with input from industry experts, what we might have been able to uncover. So I think that the issue of needing to have the regulatory clarity, needing to ensure that crypto asset activities in the United States are inside the regulatory perimeter and that there are clear rules of the road, as there are in many other countries around the world, is just more imperative than ever. So I think that that is what hasn't changed, that there needs to be the strong risk management practices, that there needs to be disclosure, reporting, segregation of assets and activities just as in any other type of market activity. Now, one of the things that is also the same, though, is the uncertain outlook in the U.S. for how are we going to get that regulatory clarity.
Great, and I hope I'm not confusing you, Commissioner, because I keep looking over there where you are probably going to see me, but you're actually on a big screen to my right, so if you see me switching back and forth, that's why. But I think you're fine. I hear you about the public roundtables and that they didn't happen. What is your thoughts around that actually happening in 2023? Do you think you'll be able to pick that up in a meaningful way?
So it is the prerogative of the chairman of each agency to agree to hold staff roundtables, public roundtables like that. This is what happened after the flash crash in, I think, 2014 2011 when the SEC and CFTC undertook a joint effort to understand what had happened in the interconnections between the stock and the futures, the equities and the futures market. I think that we can't wait any longer, and so since I have now constituted my Global Markets Advisory Committee, I would like to use that forum to be able to further the discussion. I'm very pleased to have recently announced my members, which includes not only traditional financial institutions, which are exploring blockchain technology, but also a number of crypto native firms. So we have the Chamber of Digital Commerce, we have also Uniswap Labs, Stellar Development Foundation, and I'm very hopeful that we will be able to further a discussion about the potential opportunities balanced against the risks of blockchain technology, and how do we modernize the financial system, and especially how do we think about DeFi?
Right, and I'll ask you a bit more about DeFi in a moment, but I'm going to go back to, I think right now, at least among some of the conversations we've had here on the promenade at Davos, there's mixed feelings. Actually, there's a bit of cautious optimism coming from some of the builders in the space, and others obviously have been more affected than others, depending on where they stand in the community. But generally speaking, I would say overall, it's been cautious optimism. And when you think about your interactions with the private sector and how we're going to build and, frankly, pick ourselves back up and rebuild that trust, the dialogue with the regulator is really important. I would also like to ask that question, what is really the role of the regulator? Do you take into account, obviously, consumer protection and consumer safeguards, but do you take into account the impact on innovation that you would have, particularly in the United States, if you were to go too heavy-handed, let's say on the enforcement side?
Absolutely. Innovation is a part and parcel of our markets. It's been there since day one, because since we oversee risk transfer markets, people are constantly innovating in new products as there are new risks that emerge, or other changes in the business model, or other developments as it may be. And in particular, when you think about what's happening right now with the challenging macroeconomic and geopolitical environment, there always needs to think about how do you deal with those developments. So with innovation, and I think people have talked about this a lot, I did a speech where I talked about this, of course we've moved from paper to electronic, and now we're looking at digital. In the CFTC's mission, and I think this is so critically important, the CFTC's mission is not only to ensure market integrity and to prevent fraud, abuse, and manipulation in our markets, but it's also to promote responsible innovation. And it's to oversee a system of effective self-regulation where our exchanges and our clearinghouses have their own rule books and enforce their rules over our market participants. And I think that that's really a way for regulators to leverage resources and to ensure that the industry has a strong voice, because after all, you are the closest to what is happening. You are the closest to the developments. You are most familiar with the technology. And so I think that kind of open dialogue is critically important as we make sure that we are following all aspects of our mission and our mandate, particularly in promoting responsible innovation.
I appreciate you saying that. Listening to and seeing what we're seeing coming out on the enforcement side, I think we obviously, for good reason, are beginning to hear of a lot more enforcement actions coming out of various departments, including DOJ and SEC as well as CFTC. Do you think we're now going to see a world where it's overweight enforcement versus these guidelines that people are asking for? I think there is a sentiment in the private sector side that the enforcement side now fully has the overweight status going into 2023.
I agree. Both the CFTC and the SEC have been aggressive in our use of enforcement cases. I don't think anybody's saying that we're not taking a hard tack on things, but I think that the dial has been ratcheted up even more. I think that's to be expected, of course, when you look at these kinds of losses and you look at the kind of fraud that's out there in the markets. But I think that's also why it's so important to distinguish between who are good actors and who are bad actors. For the most part, when I engage with the industry, they are trying to be responsible. They are trying to do the right thing because, to be honest, it's not a good business model to not manage your risks effectively and to not be running a sound practices. So I think that's something that people need to consider. It's not good business to not be following the rules. Now, with the enforcement actions, the flip side to having so many enforcement actions, and some of which are pushing, novel or precedential type of arguments, is that that is also a way to get regulatory clarity. It's not the way that most people would prefer. People would prefer to have some type of ex ante guidance or rulemaking, particularly a notice and comment rulemaking with public input. But, in the absence of any other kind of regulatory action, you are able to look at the complaints and look at the consent orders and get some regulatory clarity that way.
So, yes, we may actually get clarity through the enforcement side. That's a very good point. Not ideal, but I guess that may or may not happen. I want to actually focus on what you said earlier about the good actors, because there are a lot of good actors in this space. And I know you've been absolutely wonderful about communication and reaching out and having, an open door policy in the sense that you are willing to listen to those who are trying to do the right thing. So what advice do you give to the good actors in the space who are struggling a little bit about whether they come talk to you or not, or to any other regulator that may be someone that they need to actually talk to an issue about? Should they go to their lawyers first and then deal with it and then go to the regulators? Or do you have any advice around that engagement?
So I can't provide any advice to anybody. Please seek your own counsel.
Well
but the fact of the matter is, as we just discussed, that the CFTC and the SEC are enforcement agencies. First and foremost, our primary authorities are enforcement authorities. So I do think it is wise to seek good advice and counsel before approaching the CFTC or the SEC, because there's no, well, you came and you talked to us and we're not going to come after you later. In fact, I think some people have seen that to be the opposite in their dealings with the agencies. So that being said, if you are genuinely working on some interesting projects where there is an opportunity for education and outreach, because I do think that's the deficit that you see at the regulators will never have the resources of the private sector. And so I myself, as you've noted, have taken it upon myself to go out and do hands-on demos to learn as much as I can about the business model, the use cases, the different protocols, and the different applications. That comes from my experience, of course, being in the private sector and working in and around blockchain and digital assets since about 2016 or 2017 and 2013 as far as the legal analysis goes. But I do wish that others would do more of that. I am working on how do we create a true regulatory sandbox or some type of innovation facilitator within the CFTC's regulatory framework, where we are able to have a little bit more of that open dialogue and people don't have to be so on eggshells when they discuss with us. That's something exciting. That's something I've been talking with a lot of other regulators around the world as to how they structure theirs. But the other thing that I'm doing that I think is really important is through my GMAC, like I mentioned, the Digital Asset Markets Subcommittee is going to work on industry standards and best practices, because when the regulators won't give you clarity, you kind of have to make your own. You need to go look at what are analogous regulatory frameworks and identify what you believe to be responsible practices that would ensure that there are, again, the guardrails and protections that regulators would want. And so I think it's important that we have this type of private and public sector initiative where we can define what is good like. When we talk about having risk management and conflicts of interest and segregation of activities and assets, what do we mean by that? So I'd like to take it that next level down and really put some meat on the bone there and do something that people can start to build today and they don't have to wait any longer.
Right, and following on with that, what do you think are some of the more sort of unique or additional factors related to crypto that need to sort of be worked out at that level?
So I think the easiest way to approach this is almost in like three tranches or three work streams. So I think the first one is crypto financial activities, and I believe that crypto financial activities should be held to the same standards as other financial activities. So there, whatever market you're trading, whatever asset class is the underlying, the fundamental rules about financial resources, risk management, market abuse, market conduct, disclosures, and reporting are pretty much the same around the world and across asset classes. So I think it's almost a lift and shift from what is tried and true and what works and what makes most regulators happy around the world. for crypto financial activities. Of course, there's a very challenging aspect in the United States, which is the product definition and what exactly is a security. But that's something that's going to have to get worked through. Then I think the next place to work, which I find to be super interesting, and particularly really talking about responsible innovation here, is crypto non-financial activities. So in that bucket, I think about NFTs, I think about Web3, I think about utility tokens, which I think are incredibly interesting and which we don't have a definition for in the United States. And how do we define those? What do we mean by them? And what's the appropriate legal and regulatory frameworks? A lot of them may not be financial regulation. I mean, financial regulation is not a panacea for everything. There are international trade laws. There are commercial laws. There are data and privacy. There are intellectual property laws. There's many different types of laws that could be applicable to crypto non-financial activities. And then the last is just the use of blockchain technology as a technology. And that doesn't necessarily have anything to do with a particular activity, but just the opportunities that it is and its ability to be, the internet of the future, the internet of decentralization, of ownership, or some enterprise applications that firms are already deploying.
Great, thank you for that. And yes, we've had quite a few conversations around everything from supply chain tracking and tracing to digital identity and how those pieces all fit together. I want to go back to a very early comment you made about DeFi, and I know we also covered this back in Singapore, where today's version of DeFi, and I'm not going to put words in your mouth, but what do you think of DeFi and how regulators would go about regulating DeFi?
The way that I think about DeFi, or rather I should say the way to regulate DeFi, is analogous to how regulators have approached algorithmic trading. So algorithms are a piece of code, but it's what do you use that code for, who is deploying that code, and so on and so forth. A lot of it is really around operational risk management, technology risk, and that kind of thing. And so I do think that a lot of the regulatory frameworks around algorithmic trading, again, could be a good source of inspiration to look at how we might go about regulating DeFi.
Thank you. And would it be okay to take one or two questions from the audience? I'll have to kind of repeat it, but would you mind? Okay, hands are going up already. I'm going to hand the microphone over. Actually, do you mind coming over? Because it's the camera over here so that the commissioner can see you. Now you're on camera.
And it's very hard to hear, so you may just have to speak super loudly.
Yep. Hi, dear Commissioner. This is Alexei. I'm CEO and founder of EverCity. We are a carbon and green debt origination platform, now experimenting with the carbon forwards, forward delivery contracts. So thanks for your openness and thanks for telling this super interesting things. So my question is, as a startup entering the U.S. market, what is my roadmap and plan? How do I start engaging with CFTC to understand whether my product is regulated or not? What's my XYZ action plan? Thank you.
So again, I can't give you advice, although I really liked working with new product development in my previous role. But the thing is, in the United States, because there are very complex regulatory frameworks depending on what the product is, it really is important to go, I think, get the legal advice. The agency is not the first place to go to ask the agency what your product is, because the truth of the matter is we probably won't tell you. It's pretty rare in the engagement with the CFTC and the SEC over the past couple of years that you come in and you ask, is this product something that you regulate? And the agencies actually give you a straight answer. I just, unfortunately, sometimes it seems to be only one-way conversations. So please do get legal advice, but that product analysis is kind of the most critical part, and then everything flows from that.
The one thing you will get from Commissioner Pham is she's a straight arrow. She'll tell it like it is. So there you are. We only have the last few minutes left. So, Commissioner, I know there's a lot of noise. I know, there are entities in this industry that are suffering, and I am very empathetic to those who are victims. And the enforcement side of, your division will, or your organization will deal with that in time. But optimistically, I want to be a little bit more optimistic about innovation and just generally internationally. What has your engagement been with international regulators? Where do you think we're going to be heading in 2023 on collaboration and engagement at the regulator level?
Yeah. There are incredibly sophisticated and advanced discussions and initiatives going around outside the United States. I've been really excited about some of the regulators that have really been leaders in the space. There are many experiments and pilots with the industry, so MAS, of course, being a very clear example of that, but also looking at the Banque de France, for example, even the Bank of England looking at some different experiments and pilots. And I think it's really exciting that central banks, which should be the most staid and conservative of market participants, are exploring the use of DeFi protocols to make the FX markets more efficient. I think that shows that the technology does have benefits, and so I don't believe in people who think that this technology should be burned down or something like that. I think the conversation will probably speed up outside the United States because the FSB has completed, I think, its consultation period around their 2 digital asset papers, one on stable coins, one generally on digital asset regulation. And so I'm hopeful that through the initiatives of the FSB, through IOSCO, and also for traditional financial institutions, the Basel Committee came out with their prudential treatment of crypto assets, which was also a big missing piece of the puzzle. So I do think that this conversation is advancing more rapidly outside the United States, and I do think that unfortunately this might be an area where the United States ends up being a rule taker and not a rule maker.
Does that surprise you? Because I think it would surprise some folks in the U.S.
I'm not surprised by it because I've been working in the space and doing digital assets advocacy since maybe 2018.
Right.
In the U.S., I think people feel comfortable that the U.S. doesn't have to be first. I agree that the U.S. does not necessarily have to be first, but I think people think that when the U.S. finally moves, the rest of the world is going to have to move with it. And that can generally be true, but I just don't think I share the same overconfidence in that respect, that the rest of the world will just bend and make way for the United States. We do have the biggest markets, but I just have to be, I think, a little bit more realistic when thinking about that. So I also like to say that I'm American, but not too American.
Got it. Well, that's a very sober view of how this may pan out. We're out of time. I want to thank you, Commissioner, for your time. We wish you were here with us, but this is not a bad way to get together. And I will tell you this, there is an entire community of good actors, builders, working on incredibly difficult problems that actually benefit society. So glad that you are able to share some time with us today. Thank you.
Thank you so much.